pre-open suggesting that the markets could possibly start off today's trade as well on a little bit of a higher note. We've got less than a minute to go for the market to kick, just around a minute to go rather, for the market to kickstart live trade as well. Mayuresh, Joshi from Angel Broking also joining in this morning. Mayuresh, a quick comment here in terms of how markets are likely to play out and if you believe this momentum is likely to sustain.
Morning, Priyank. I think it now depends on what the RBI does from an immediate short-term perspective, but our take from medium-term perspective is the market is bound to stay in a range. So the larger scheme of things probably have not changed. Corporate earnings, reform processes, what happens with Bihar. So our own take is that Nifty might just get stuck in a range for some length of time between 7,500, 7,600 to around 8,200, 8,300.
All right, gentlemen, just hold that thought. Let me just quickly run our viewers through the market opening as well. That we're just counting down to. You've got a slew of counters to actually focus on today. Hindalco and ICICI Bank are some of the stocks that are actually somewhat weak in the pre-open, and they're likely to start off trade today on a softer side, while Kane, Bajaj Auto, ONGC, Tech Mahindra and PNB are some of the stocks that are in positive, is what we're seeing. You've got Sun Pharma again holding on to that gain, is what we're seeing, 1% higher in the pre-open. Infi also, that GST contract win is the other factor that's been lifting that stock to a certain extent as well, is what we're tracking out here. All right, let's get the live trading going for you as well. You've seen that markets open above that 8,000 level straight away. In terms of what we're seeing, 0.5% gain as far as the benchmarks are concerned. Kane and Infi leading from the front is what we're seeing. BHEL, Axis Bank, ONGC all showing some bit of strength right now. Wipro also in positive. So a couple of the exporters are seeing some bit of cheer here. Hindalco is down nearly 2%. We were talking about what kind of commentary and updates up regarding the CBI as well, and the entire angle in regard to the whole bribery bit that we've been seeing from the Supreme Court as well. So that's putting some bit of overhang on the counter. ICICI Bank, Tata Motors among some of the other stocks that are a little slow on opening. Let's get some of the volume traders going. Amtech Auto, just get the stock going for you very quickly. Amtech Auto starts the day off with a massive cut of almost 17% is what we're seeing. Again, the fact that there have been reports indicating that there's been still no clarity as far as they managed to pay some of the bondholders. They have tried to manage to get some bit of debt recast going on. Yesterday, a colleague from Bloomberg was talking about the fact that there could be some bit of a debt recast in place out here for Amtech Auto. But again, the stock's seen a little bit of a knock today, 11 to 12%, and opening straight away. This count is pretty volatile, is what we're seeing. Motherson Sumi continues to face that overhang, 4% lower on the back of the worries regarding Volkswagen. So that stock, remember, 44% of its revenues on a consolidated basis come from Volkswagen, is what we're seeing. But the standalone US unit itself would be much lower, is what we're seeing. So that's the other counter that's in focus today, is what we've been tracking. Now 5.5% lower on Motherson Sumi is what's happening there. Beyond that, Jindal Stainless is the other stock that's down nearly 12% on opening as well, is what we're tracking so far. And pull-ups, Spark up nearly 5% is what we're seeing in terms of some of these counters that are buzzing straight away on opening. All right, Gaurav, one final comment here as far as some of these stocks are concerned, and there have been buzzing in terms of trade today. Hindalco, if you've got a specific strategy, we discussed NMDC earlier. What about Hindalco?
To be honest, it's been trading in a range. We can see that it may fall 3 or 4 rupees, or it may jump by 3 or 4 rupees. The fact of the matter is that the range is predefined. You have 72 on the lower end, 78 to 80 on the upper end. So right now I'm not too interested, or not. It's not on my radar right now. One can sell a triangle, but then it's a high beta. You never know. It may jump 5% in a day, or it may fall 5% in a day. So I would be very much careful as to what trades I select. This particular stock is not any trend, whether it's uptrend or downtrend. Neither it's a slow-moving stock like Bharti or something like ITC. So I would not be having any call on that.
All right, Gaurav, we leave there. Thanks so much for stopping by today and sharing your thoughts and perspective on the markets. Mayuresh, let's continue the discussion on Hindalco. It's a top loser today that we're seeing, down nearly 2%. Your views on Hindalco?
Really, Priyank, I think a lot more is going on what kind of regulatory concerns that the company is facing. So I think that the air gets cleared on all these counts. Till that point of time, I think there's no point of us discussing these stocks. I think we're maintaining a neutral on this stock at this point of time.
Okay. The banking counters once again, Mayuresh, seem to be holding steady is what we've been tracking today. You've got Bank of Baroda, PNB, SPI also holding on. Axis also still continuing to latch onto that momentum that it picked up yesterday. Any thoughts from the banking pack as to what should the strategy be here?
So clearly, Priyank, I think time and again our bias has been with the private sector banks, and the bias continues more or less with the strong earnings trajectory that all these banks have displayed in their earnings in the quarter gone by. So clearly, I think if you leave aside a few bumps in terms of how asset quality panned out, for a few of those banks, I think the retail advances were very, very strong. Asset quality was not as bad compared to a few of the public sector banks, and though the valuations are on the higher side compared to the PSU space, I think that premium advantage will still remain with the private sector banks. So I think yes, we remain very, very optimistic on the private banks like NAS, Axis, ICICI. We believe there is a huge amount of value there. And specifically after you've seen the price erosion happening over the past few weeks, I think they become good entry points for long-term investors. Within the PSU universe, I think State Bank is probably the only bank that we are liking in terms of how the CASA ratios are panning out, their focus on the management of curtailing bad assets. And clearly, I think capital adequacy also remains extremely strong for that. So I think SBI is the only bank at this point on the largest space is what we are liking in the PSU universe.
The IT pack as well, Infy's up nearly 1.4%, Tech Mahindra seeing some bit of gain today as well. Anything from the IT pack, Mayuresh, that you would be watching, or you've got a specific preference when we talk about this space?
Priyank, clearly I think the large cap IT is something that we continue to prefer. To like the quarter one had issues related to visas. Again, I think clearly how wage hikes have taken place have taken a hit on the EBIT margins. But clearly when we're looking at the next 4 to 6 quarters, we're seeing client mining activity pick up in a big way for a lot of these big IT firms. The focus has been very, very clear. Yes, there have been specific issues. For example, the Tech Mahindra issue, where the organic communication business, which accounts for nearly 52% of the overall top line, has taken a hit. But the market has taken that into the stride. And clearly, I think if you look at utilization levels across IT firms, Infosys still, in our opinion, has a headroom of around 300 pips to show improvement on that count. And again, I think the different business verticals that all these guys cater to. So Infosys, again, in terms of how their core business verticals are panning out, TCS, digital, HCL Tech, you look at the application services, the IMS, the engineering, which contributes around 18.9% of their overall revenues, has a huge scope in terms of how the order wins and margin improvement can take place. Again, from a valuation perspective, clearly I think if I do a simple comparison check between that and the overall pharma industry, it still looks very, very lucrative in that sense. So clearly I think Infosys, HCL Tech, Tech Mahindra is something that we continue to prefer on decline. Long-term investors can have a look at these stocks with a 4 to 6 quarter perspective. I think the stocks can give brilliant returns even from the current one.
All right, so that's as far as some of those IT names are concerned. You know, the last couple of days, last 2 days or so, Mayuresh, one trade that's been active out here has been this entire exposure to Volkswagen and the kind of move that we've seen. One of the big local suppliers has been Motherson Sumi itself. That one's down nearly 6% after a 7% fall yesterday as well. There you go, that stock. And if you look at the way the console exposure it has to Volkswagen, and when I say consolidate, it depends on, it's across geographies. It's almost 44% of revenues actually contribute on a console basis, what Bloomberg is throwing up as a stat. Mayuresh, this is going to be concerning. I understand that the problems are only limited to US right now, but what do you make of it?
So clearly, again, I think the market is concerned that if the spillover effect happens to Europe, where the majority of Motherson Sumi's plants are, it might have a telling effect in terms of how the revenues will pan out. And yes, I think if that happens, I think the EPS hit will be quite significant for Motherson Sumi. The structural positive story remains very, very strong. I think it's got a very strong order book. The plants are functioning at high utilization levels. The new plants that are expected to come through can significantly contribute to Motherson Sumi's revenues going forward over the next 2 years, and the revenue forecast has been quite strong. However, I think the domestic business has been facing a lot of issues in the quarter gone by. You've seen what happened with falling copper prices, the discounting probably going up, and clearly I think the currency fluctuations on a line-by-line item in the P&L also takes a hit for Motherson Sumi. So if I offset the positives with the negatives, I think the sentiment is probably not in favor of Motherson at this point of time. We're also looking at the new factories coming through, what kind of cash flow impact that will have, and it will definitely have a margin hit as far as SMR and SMP operations are concerned, which in fact came in lower at 6.19%. I think our own take was it might just inch up higher with the kind of order book and execution capabilities that Motherson has. So I think the margin pressure might continue for Motherson, and if this is added on with what happens for the Volkswagen and spills over to Europe, I think the EPS hit will be quite significant. So I think a little bit cautious on the stock at this point of time. I think better auto ancillary companies, something like tire stocks, is something that we still continue to prefer at this point of time.
Just pull up Apollo Tires for you again. Decent volume on opening is what we're seeing on that stock. And the way, just pull up a couple of the peers or the entire pack that we've been seeing on the tire manufacturer space. Sept, as we've been seeing, has been extremely active. That one's up nearly 1.6%. Apollo, MRF, get all those stocks. They're all in positive. The momentum seems to continue out here. Since we're on the topic of auto ancillaries, Mayuresh, what we've been tracking as far as some of these tire manufacturers are concerned, they seem to be holding steady today. Any thoughts on it?
So clearly, as I said, I think we remain optimistic on the tire story, and clearly I think if you look at the management transcripts in the past quarter and the quarter gone by, I think you're probably looking at some amount of top-line pressure coming through, and that is an obvious indication with Chinese imports probably coming through specifically on the replacement market. The hinge on recovery basically depends on how the OEM will pan out for a lot of these auto players and tire makers. But clearly, I think if you look at input costs going down, that will have a telling effect in terms of margin expansion. And our own take is that the ROEs can significantly expand even from the current levels, at least for the next 3 to 4 quarters. So timely capacity expansion is taking place for a lot of these tire makers. Yes, I think a few of them have got debt on their books, but with cash flows improving over the next few quarters, I think the debt should come down significantly. And with capex probably topping off, no significant capex as a percentage of sales expected to come through over the next few quarters will definitely also aid the return ratios for a lot of these companies. So yes, I think we've just exceeded our target price in terms of how Sept has moved over the past few weeks and months. But JK Tire is something that we continue to prefer. Its Mexican operations got hit in terms of how the currency moved. But clearly on a larger scale, I think with expansion happening both on the tire and the passenger vehicle segment, and a huge way to go in terms of how truck and bus radialization might pan out over the next few years. JK being a leader there, our own take is that the numbers will be exceedingly good for JK over the next few quarters, to say the least.
All right, one quick comment on Amtech Auto, Mayuresh. That one's again in trouble, 6% lower today is what we're seeing. There's been some bit of hope from the management clarifications recently. Any view on Amtech Auto?
No view, Priyank. I mean, I'm not touching that stock. Better auto stories to look at, as I mentioned right now.
All right, fair enough, Mayuresh. Thanks for taking the time out today to talk to us and sharing your thoughts and perspective on the markets out there. Mayuresh Joshi from Angel Broking with his views right now. But the market so far holding steady, 0.5% gain on above 8,000 as far as the Nifty is concerned. So it's once again been stable as we're counting down to expiry as well. Remember, it's a truncated week, but the markets have been taking it quite well, is what we've been seeing ever since we got that clarity as far as where the Fed didn't really move on in terms of rates. The pause seems to have helped some of the risky assets like the emerging markets, India, part of it as well. Infi, Bank of Baroda, PNB and Wipro are the top gainers, while Hindalco, Z and Power Grid are the ones that are losing out. From the non-index space, the stocks to watch out for: Amtech Auto and the entire group again in focus today. Amtech Auto's started the trade with a massive cut. Right now, it's recovered, but still down 7.5%. And Motherson Sumi, the other big stock that we're watching out for. All right, with that, it's a wrap on this edition of Street Smart. But coming up next, exclusive voices from the Ambit India Conference in New York. Ashok Wadhwa and Saurav Mukherjee in conversation with Siddharth Zarabi.